There is no sort of Christmas spirit which is shining on our markets today. But nonetheless, we've had a very strong run, so you need to put that into perspective when you see this cut on the Nifty coming through. So currently down around 1.2% currently for the Nifty. We have the mid-cap index, which is lower by around 1%, and the bank Nifty, which is sold off as well. So all of the indices in the red, pretty much in line with what the global markets are doing. US was lower, Asia was lower. But for an overall perspective, we've still outperformed the globe on a week-to-date basis. And on a week-to-date basis, the mid-cap index, in fact, has done very well as compared to the Nifty, up around 1.3%. The statistics on your screen. Hi, Rima.
Hi, absolutely. The MSCI India Index, as you said, up about 3% odd. Compare that with the MSCI Emerging Market Index, which is down about 1.5% for the Asia ex-Japan. There is that big outperformance. Today, of course, we are tracking the slump in global Q. So as we speak, down about 1.2% on the benchmark indices. The mid-caps too are falling very rapidly. Let's invite Mitessh Thakkar to take stock of the market technicals and how you should approach trade now. Mitessh, so far we were resilient, but now the sell-off seems to be picking up in pace. What would be the index call?
Yeah, so actually this is where I was looking at the downside of the index possibly being, the downside range being established around 10,820 odd levels, and we're practically there. In case we keep breaking below that, then I think the index could possibly fall to about 10,735 to about 10,700 zones. So in that sense, I would be watching this level very, very closely. The structure is slightly weakened with the last 2 hours of fall, and I think a lot of stocks are also falling, and the breadth is also on the negative side. So I think there is a fair chance that we might actually correct down to about 10,700, but that still will not alter the bigger trend in the sense that we've rallied from 10,330 to about 10,950, and we're just giving away 200 points, which is 1/3 of the 600 points kind of gain which we had. But yes, there could be a stronger pullback which could happen in the next 1-2 days.
Okay, Mitessh, stocks?
Yeah, on the stock side, I have one buy and one sell. Ashok Leyland is a sell with a stop at 106.2 for targets of around 100, and CESC has given a pullback now close to important levels, so buy with a stop at 696, look for targets of 730.
Okay, let's get in a Twitter query that we've got for Mitessh. It's coming in from Aryan, who has 100 shares of J. Kumar Infra, bought at a price of 150, and he wants to know whether he should hold on to it or sell. Mitessh?
See, in the last few minutes, sessions, I think the stock has kind of given a big breakout and then has corrected for the last 3 sessions. But as long as the stock is above around 127, I think above 127, I think maintain a positive bias. I think the stock can head towards 160, 165 kind of level. So if somebody wants to buy a fresh, keep a stop at 126, look for targets of 160. If somebody is holding, I think again same stop loss, then look for targets of 160.
Okay. All right, Mitessh. Thanks very much for joining in and giving us all of that technical perspective. We'll touch base with you later on in the shows as well. But as of now, let's get in some fundamental perspective on the markets. In fact, we have Pramod Gubbi, who is the co-founder of Marcellus Investment Managers, joining in for a quick take on the markets. Pramod, hi. Thanks very much for taking the time out. Well, should we be concerned about this profit booking that we're seeing today?
Well, I guess the short-term volatility is the order of the day, given the number of moving parts that are driving the markets, and also the amplified nature of these movements, given the sort of trading that's happening in the marketplace. I think we did hold up quite well in the wake of the Fed rate hike, when the rest of the global markets were taking that correction. So it's about natural we follow suit at some stage. So the clear driver for India has been the crude prices, which remain fairly modest now, and that should help both in terms of the currency movement and also a lot of the input costs for the economy in general. So that should keep up, at least the sentiment in the market quite positive for now.
Pramod, can India continue to outperform its global peers? And just for the near term, do you see this correction extending itself? Are we in for more downside? And what about the mark at 10,000? We've taken support over there for the last couple of times. Do you see a bottom for the market at that level?
Well, no, I think there are two forces at play. One is, like I discussed, the benefits of the low crude oil price should definitely accrue positively for India, both through the fundamental way in terms of lowering input costs and also the sentiment around the rupee coming back into handle. But if the Fed rate hike and the tightening liquidity across central banks in the West continues, then the capital account conduit will also start having an equally negative effect. I'm not sure if it's equal or more overbearing. We'll have to see. But at a time when you're looking at interest rates in the U.S. somewhere between 2.5% and 3%, it's very difficult to see continued flows into emerging markets or any risk asset class for that matter, and that would include India. So within emerging markets, of course, India will continue to stand out in a situation like this. But we also have to contend with a little bit of uncertainty given the general elections coming up over the next 6 months. So fundamentally, I think these are definitely positive. But given capital flows could be at risk if liquidity tightening were to continue globally, we won't be totally immune to it.
Pramod, what about liquidity tightening when it comes to NBFCs? Are you seeing maybe an opportunity now emerging at these valuations and the fact that liquidity has eased for them?
No, I don't think so. I think there is more to go for NBFCs. I guess they enjoyed their time at a certain stage of the credit cycle. I guess with where interest rates are now and with the recapitalization of PSU banks, you will see some sort of credit share gains going towards the banking system. Both private sector banks and public sector banks should take some share away. So I won't look at NBFCs across the board straight away. I think there's more to go in terms of correction.
Okay, more to go in terms of an NBFC correction. What about the capital goods space? Increasingly, a lot of people are betting on it. Private capex also picking up. Would you be in that camp?
I think so. I think we are looking at utilization numbers across several industries heading towards the 80s now. And this is about time when some of these companies start looking at expansion plans. The underlying economy remains healthy in terms of demand. So except for the fact that the next 6 months are going to be uncertain politically, and you may not see too many corporates making those expansion decisions just yet. But on the other side of the elections, you can clearly expect a recovery of sorts in the private capex cycle. And hence, the capital goods sector should look, after long hiatus, should come back into the reckoning.
So what's the range, Pramod, before we let you go? We've just about, we couldn't test 11,000. We've retracted from those levels. So at least in the short to medium term, what would the range for the Nifty be?
Well, the short-term prediction remains the hardest bit, given the market internals, the way that they have evolved over the last 10 years. I mean, if you had asked us, where the crude oil price would be a couple of months ago, nobody would have gotten a sense. So I wouldn't really hazard a guess on that front. But given the flows, I think you would tend to think that 11,000 perhaps stops.
Okay. All right, Pramod, we're going to let you go on that note. Thanks very much for joining in and giving us your view on the fundamentals of the market. Right now, we have a couple of stocks. Bharti Infratel, in fact, is one of your top losers on the Nifty. So that one's down around 4.5–5% UPL is the other stock in focus. That stock is down around 3% In fact, it's lost around 2.5% this week. So it's been a topsy-turvy kind of ride for that stock.
Infratel, of course, is down because of the overhang of Bharti Airtel's big 32% stake sale. So that obviously will have to happen at a bit of a discount. So there is a supply overhang for Infratel today.
Absolutely. And in fact, it's sector agnostic. There are only two stocks which are in the green right now for the Nifty. It's Tata Motors, which is managing to hold up around 1.3%. HPCL, which is just about managing to hold its head above the water. That stock also up around 0.3%.